This is Matthew Cratter from Trader University, and today I want to answer the question, can Wall Street suppress the price of Bitcoin? And also answer the question, are there actually 21 million Bitcoin, or might there be a larger supply than that? If you want to learn how to make money in both bull and bear markets, or you just want to see what I'm trading or investing in, be sure to hit that subscribe button. So anyone can run a Bitcoin full node. You can download Bitcoin Core, and you can run this, and you can actually use various commands to verify the complete supply of Bitcoin. This can be verified online, which is very nice. You can also go to this dashboard, the Clark Moody Bitcoin dashboard, and you can see the current number of Bitcoin in circulation. This is more an issue of trust, whereas if you actually run Bitcoin, a Bitcoin full node, and run Bitcoin Core, you can actually validate this for yourself. But this is not really what my video is about. I want to talk about what Wall Street can do to manipulate the price of Bitcoin. So the most important maxim to remember, and if you've been around long enough, you know this is true, Wall Street ruins everything. They ruin everything that they touch. It's nice to have capital markets. It's nice to have a deep and liquid stock market, etc. But Wall Street ruins everything. Wall Street likes to create lots of things out of thin air to satisfy demand. And that's what they're doing now. I've seen this cycle before. If the public wants something, especially if retail investors want something, they will come out with endless supply of it. And they're able to manufacture supply because they don't actually have to build factories or anything. They can just print paper. And in this way, they're very closely related to the Federal Reserve. So that's why we see endless IPOs now. We see endless SPACs. We even see, I think I saw this morning, there's a blank check ETF that's in the process of coming out, where you basically give them your money and you don't even know what they're going to spend it on. So that being that, this is also what happened leading up to the housing crisis of 2008. They created all these esoteric derivatives like CDOs that were tied to the housing market, tied to housing prices, mortgage prices, etc. And this sort of synthetic market ended up being 10 times, I believe, if I remember correctly, maybe it was in more than that, 10 times the size of the underlying actual market for these mortgages. And as a result, you had a real situation where the tail was wagging the dog. So this is something I haven't talked about yet, though I've been quite aware of it and trying to think through it. What happens when Wall Street gets really interested in Bitcoin? They're good at creating lots of paper. So what happens if they create a lot of synthetic or fake Bitcoin? In other words, what I've called in the past Bitcoin IOUs, where the only way you really own Bitcoin is if you hold your own private keys. You hold your Bitcoin, for example, on a hardware wallet. If you buy Bitcoin IOU, as we're going to talk about, if you buy GBTC, or maybe you buy Bitcoin on Robinhood, you're not holding your own keys. You don't actually own the Bitcoin. The brokerage or the trust company can freeze your account, and it also may turn out that they don't actually hold as much Bitcoin as they say that they do. And so if Wall Street ends up doing this, they could actually increase the total supply of real Bitcoin beyond the 21 million simply by creating a lot of synthetic or paper Bitcoin. And the problem with having excess supply is that this will likely suppress the price of Bitcoin, hopefully only over a short period of time. But this is something that we have to think through. So I'll give you a perfect example. If you use Robinhood to buy Bitcoin, and Robinhood is famous for not allowing you to withdraw your Bitcoin from your account there, which I find very strange and very suspicious. So I think there's a chance. I mean, I like Robinhood. I use them. They seem to be a decent company, but there is a chance that they don't hold as much real Bitcoin as they say that they do. And so if you buy BTC from them, you're not actually, I mean, who knows what you're buying? You're buying a ledger account. You're buying an entry on the ledger of your brokerage account. But you're not necessarily contributing to the real demand for Bitcoin if you're just buying paper IOUs or digital IOUs from Robinhood. Now, maybe they're fully reserved. Maybe they have as much Bitcoin as they do have customers holding Bitcoin, but we just don't know. And I think the fact that they won't let you withdraw your Bitcoin shows that there's at least a probability that they don't hold as much Bitcoin as they say. GBTC, I haven't looked into it completely, done a deep dive into it, but are they fully reserved? at all times. They probably do, I would guess they do quarterly audits, but are they fully reserved every second of the day, every minute of the day? If not, if you buy GBTC or you buy Robinhood Bitcoin, you're not actually contributing to demand for real Bitcoin. And in that sense, you're not driving up the price, you're not taking supply off the market, and it's sort of defeating the whole purpose. So we could call these Bitcoin IOUs, paper Bitcoin, synthetic Bitcoin. This morning I came up with the idea of calling it, punning off of fool's gold. We could call this fool's digital gold. What I would say is that I would like to see, if I were advising Coinbase or Gemini or Robinhood, I would like to see them offer proof of reserves where you can verify cryptographically online that they're holding as much Bitcoin as they say they are, and that there's a match between customer ownership of Bitcoin and the amount that is fully reserved. Those of you who are gold bugs who have followed the area have known that this has been a real problem in the gold market for years, with government price manipulation, possibly through the gold futures, suppression of gold prices. But it's a much bigger problem for gold than for Bitcoin, simply because governments, central banks, other kinds of banks own most of the world's gold, actually have it in their vaults. The other problem for gold, obviously, is it's impossible to know the true supply of gold. Terrestrial gold, extraterrestrial gold. And so I do like gold. I don't like it as much as Bitcoin because you cannot verify the supply. And the real problem with gold, as I said, is that most of it's in the hands of your enemy, which is the governments and the central banks. Not so for Bitcoin, at least at this point. Most Bitcoin seems to be held by individuals and by retail traders, though Wall Street is beginning to get involved. So what's the solution for this? Well, it's actually fairly simple. Don't buy GBTC if you can help it. A lot of people buy it because it's a way of getting it into their retirement accounts, but you have to think of what you're doing. Perhaps they do seem to be buying a lot of real Bitcoin on the market. I won't deny that. But if you're going to buy Bitcoin, you might as well buy BTC. The real thing, buy it using Gemini or Coinbase. I like Coinbase Pro because they have very low commissions. I'm not affiliated with any of these companies, obviously. But don't buy GBTC, don't buy Robinhood Bitcoin until they allow you to withdraw it. And when you do buy your Bitcoin on Coinbase or Gemini or Kraken or whatever you use, withdraw it immediately and hold it on a hardware wallet like a Trezor or a ColdCard. If you leave your Bitcoin on an exchange, it can be frozen, it can be stolen, it can be hacked. This is what happened in the famous Mt. Gox hack, where people held their Bitcoin on the exchange and it disappeared, was stolen, whatever happened to it. And so this is why it's really important. There's this famous saying, I think Trace Mayer came up with it, not your keys, not your coins. And he invented something called Proof of Keys Day, which is January 3rd of every year. This celebrates the first block of Bitcoin, which was mined, I believe, on January 3rd of 2009. But let me show you why this is important. What happens if everyone leading up to January 3rd, or just does this at any point in time? Because if you value your Bitcoin, especially if you put a significant portion of your net worth in it, why in the world would you leave it on an exchange and have to put your trust in Robinhood or Coinbase or Gemini? So what happens if everyone follows proof of keys and withdraws their Bitcoin from the exchanges? Well, you could get the mother of all short squeezes, especially around January 3rd or in the run up to it. Because if these exchanges are not fully reserved and you ask to withdraw your Bitcoin, they do need to legally send you Bitcoin. Of course, they could just gate everyone and shut things down, but that would destroy their businesses and destroy all confidence in them as exchanges or in them as custodians of your Bitcoin. But if everyone does this, what will happen is if they don't have enough Bitcoin on their books, real Bitcoin, they will need to go on the open market to buy Bitcoin to fulfill these withdrawal requests. And this could lead to a giant short squeeze. And so the important thing is when you talk to other people about Bitcoin, tell them not to buy synthetic Bitcoin from Wall Street. Tell them not to buy Bitcoin IOUs. It defeats the whole purpose of monetary sovereignty, where you control your keys, you control your money. No one can take your Bitcoin from you. And so this is a real danger. I don't think it's happening yet. But as soon as Bitcoin becomes hot, which it probably will, in the coming months, we're entering the most bullish part of the cycle, Wall Street is going to crank up their money printers and they're going to print a lot of synthetic Bitcoin. And to the extent we can tell people about this and say, don't buy Wall Street's garbage, buy the real thing. That being said, even if people buy Wall Street's garbage, I think it will still probably contribute to incremental demand, but we can't take any chances. And there's no reason to let the old system try to take control of this new monetary system. Wall Street has caused nothing but problems over the last 20 to 50 years. Central bank has caused nothing but problems since 1913. And so to the extent we can disengage ourselves from the old system and move into the new system, hold our keys, achieve monetary self-sovereignty, not only will it provide more security for your own Bitcoin, but it will help to increase the price of Bitcoin as well. If you enjoyed this video, be sure to hit that subscribe and like button. Hit the notification bell so you can be notified when I post my next video. And let me know your questions and comments in the comment section below. Thanks a lot for listening, and I'll see you in the next video.